Moving back to business and back to what's taking place in the property arena. We've had some data out which has indicated that we're seeing strength once again when it comes to property. The latest data from the UK showing us that house prices rose by almost 6% in June compared to last year. The ONS said that house prices, they've jumped by 5.7% as buyers, they pushed through with purchases which were being delayed in the run-up to May's general election. How can investors get in on this action? Are there alternative ways? Gandesha, he's the CEO of Property Partner, a new crowdfunding property platform. Dan, welcome.
Thank you.
So first of all, just tell us a little bit about the company. I mean, what is Property Partner?
Sure. Property Partners, property crowdfunding platform and trading exchange, which I appreciate means very little to most people. So it's best described with an analogy, and that analogy is a stock exchange. And if you think about a stock exchange, if you want exposure to a specific company, you don't need to buy the whole thing. You can buy a piece of it. During a period of your ownership, you'll receive an income stream in the form of a dividend. And when you want to exit, you can simply exit on platform at a price that reflects the underlying value of the asset. And Property Partner is building the same thing for property. So you can invest in a specific residential property with as much or as little as you want, receive your share of rental income every month, and have access to capital growth by selling your investment on platform whenever you like. And every 5 years there's liquidity protections too, to ensure that even the smallest investor can exit at market value at periodic intervals.
I have a lot of questions here. So,
sure.
So how do you find the properties? So, because you launched in January, right? So it's a very new company.
Yes. So our public launch was just 6 months ago, and our properties are sourced by our Director of Property, Robert Weaver, who was formerly Global Director of Residential Property at RBS. He ran a £500 million residential property fund before that, and sits on the committee of the British Property Federation. So he's one of the UK's most experienced property professionals. And we start by asking our investors where they want property, first and foremost. So over 2,000 of our investors have asked us to prioritise London first, the South East after that, and then international locations and the rest of the UK thereafter. And then we overlay Robert's expertise and offer them opportunities that we believe can offer outperformance.
So he'll find a property, say Andrew and I, we want in on this for an example. It's just an example. So he goes out, he finds a fantastic property in the heart of Belgravia, for an example, a very fancy pants place in London.
Yes.
And then what happens? So then Andrew and I, we can then decide to opt in. I can decide to invest, say, £1,000, and Andrew can invest £1 million.
Absolutely. Firstly, we would avoid the property in Belgravia. Yields are very low there, so we tend to go to cross-rail locations or regeneration areas.
Okay.
And absolutely, we source the property. We typically exchange contracts on that property before it goes on the platform, so we've paid a deposit. The seller has certainty that the transaction is going to happen. The investors on our platform have certainty that that process is going to complete, and we underwrite the funding process, and we make it available for investment. What's actually happening is those investors, when they invest, they become investors in a special purpose vehicle, a UK limited company, which in turn buys the property. There's different SPV for every single property. So you're essentially becoming a shareholder in that company. You invest as much or as little as you want, and you have access to photos, floor plan, a third-party valuation. And once you've decided whether or not you want to invest, you simply fund your user account, click invest. It takes a few minutes. And then every month you'll receive your rental income as a dividend and a revaluation.
What happens if there's negative equity? If the house prices drop, there's a huge crash, and suddenly I'm sitting in with risk?
Yeah, absolutely. I mean, investing in property has risk. And we don't eliminate the investment risk from this asset class. Property prices can go down as well as up. Mm-hmm. But what we do allow you to do is spread your risk across multiple properties. So if you think about direct investment, if you wanted to go and buy that property in Belgravia, you're going to need a 40% deposit, but you're certainly going to need a lot of upfront cash, which means you can only buy 1, 2 or 3 properties. You're heavily exposed, whereas on our platform, some of our investors have built portfolios of 15 plus properties, and they're able to diversify their risk. So you're still exposed to the risk of property prices going down, but at least you can spread that risk across multiple properties.
And the crowdfunding is for the equity component and the debt component, both of them, or just the equity component? Or?
Just the equity component. So all of our properties to date, we've funded 23 over the last 6 months, have been entirely ungeared, and we're offering our first geared investments coming down the track within the next couple of months. And those ones, when they're geared, will have a mortgage against the underlying property, and again the equity component that's sold on platform. We don't offer the debt on our platform at all.
But then you hold the property forever? Like, if I want out, then after 5 years, I say, look, I think the property market's gone up by 20%, and I'd like to see that return.
Absolutely. So firstly, we revalue the property every month, and you've bought a share, and that feeds through to a later share price on the platform, and that's a signpost. People can sell on platform whenever they want. They can mark up or mark down depending on the speed of sale that they want. We've had over £1 million traded on platform after people have invested in the last 6 months. There's been a lot of activity, but that in itself isn't good enough. What if there isn't liquidity on platform? So every 5 years, we have a third party revalue the property, provide a new anchor point on valuation. Anyone that wants to exit can exit at that price. If they can't exit for whatever reason, the underlying property is sold, proceeds returned to investors.
Dan, we've got to go. Very interesting. Thank you very much, Dan. Gandesha, CEO of Property Partner.